Okay, good afternoon and welcome back, everyone. Today, what we're here to talk about is the US election, the outcome, the results, and more importantly, how markets are currently reacting to it. So let's go ahead and get started. But before we do, what we're going to discuss here is what we're going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. So today what we're going to talk about is looking at the US election in terms of the debrief and outcomes. Now, because the outcome of the election is not yet determined, we are likely going to be continued to talk about this on our Tuesday and Friday morning market outlook sessions. I certainly will be looking at this a little bit more in depth tomorrow in terms of across all the sectors, across all the different instruments, what opportunities we see or what movements we have seen as a result of the current market's expectation for the outcome. But today we'll talk a little bit about where we stand, what major shifts we've seen in the markets, and what we're likely going to see going forward. Now, for the month of November, we're going to do, is a shorter month because of Thanksgiving is the last week. But next week, we're going to talk about gaining your directional edge with options play. I think that is as the markets are likely going to provide some opportunities here over the next few weeks, and more importantly, in the next few months, we really want to talk about the tools that are available to you here at Options Play that help you gauge that directional view. A lot of investors ask us, during our questions when we do our live market analysis, when we do our Tuesday and Friday morning sessions, a lot of the questions that we get are around, getting a directional view. So I want to show you the tools that are available to you here at Options Play that can actually do that work for you and give you a better sense for trend and relative strength, two very important indicators that we look at to gain that directional edge. And then the last Thursday, what we're going to do is we're going to talk about the different tools and services that are available to you, because a lot of questions from investors regarding how they can maximize the tools that you have available to you at Options Play. We've added a lot of things over the past few months. I want to make sure that everyone understands the wealth of knowledge that we provide here for our members. So please join us here, on the last Thursday this month, where we're going to discuss those things and walk you through the different tools and services that you have at your disposal as being an Options Play member. And then lastly, Thursday, the 26th is Thanksgiving, and we will not be doing a session here on the last Thursday this month. So just a reminder for everyone, for those of you that are looking to follow the markets and making sure you understand where the current markets sit and what opportunities there are in the markets, please make sure you join us every single Tuesday and Friday morning at trade.optionsplay.com/weekly. You can sign up for this for our Tuesday and Friday morning Outlook sessions, and I posted a link into the chat window for those of you that want to sign up. So today we're going to discuss the US election, what we've seen in the markets, but tomorrow morning we're going to take a look at the broad markets, all the different sectors, and where they currently sit. So let's go ahead and get started. And the primary thing that I want to help investors answer going from this particular session is really understanding how does the current outcome or the potential outcome of the US elections affect the markets going forward. So my name is Tony Zhang. I'm the chief strategist here at Options Play. And what I want to share with you are the research that I'm currently paying attention to, the news events that we're keeping on top of to understand how markets are reacting and what opportunities are likely going to come out of the US elections based on where we currently sit. So when we look at the US election so far, first of all, we've had record turnout, huge support on both sides, 72 million votes for Biden, 69 million for Trump. So regardless of which side you're on, there is a strong support in this country for either candidate. We are in a very divided country right now. There's a lot of support for both candidates. Now, the current electoral college currently sits at 264 for Biden, 214 for Trump. Most of the news outlets have the same call here in terms of who has won the electoral, how many counts in terms of the electoral college. But keep in mind that, December 8th is actually when the electoral college votes on who becomes the next president. So a lot can happen between now and then. But right now, the path to the election, Biden has really four paths. He can win either one of the four remaining states: Nevada, Pennsylvania, North Carolina, or Georgia. Any one of those states, if he wins the election. Trump has to win all four in order to win the election. So the path to election is clearly in the favor here of Biden. But Biden is only currently leading in one of these states. There is still Pennsylvania, North Carolina, and Georgia, where Trump is still in the lead. Even though there are still mail-in ballots to count, they are still counting. We expect to see some more out of Georgia and Pennsylvania later today. We may not see more results out of Nevada until tomorrow. But right now, we're all waiting here for that count. However, even when these come in, and we might be able to declare a winner, we know that there's likely going to be a recount here in Wisconsin. We know there's going to likely a recount here in Georgia. The Trump administration has filed quite a few lawsuits to attempt to either stop counting or trigger recounts in certain states. So there's a lot that can still happen here over the next few days, next few weeks. So we're not quite there yet for anyone who's maybe celebrating. If you look at the markets certainly seem to have priced in a Biden victory, specifically with the split government. Some betting websites, still have Trump at about 11 to 12% chance of winning, and Biden at about 88% winning. There were a few sites that actually ended up paying out a Biden win on some betting websites. But again, the election isn't called just yet. The probabilities certainly seem to favor Biden at the moment, but we don't have an outcome just yet. What I think is more important than the presidential election from a markets or investment perspective is actually the outcome of the Senate. Right now, the Democrats are not doing as well as perhaps they were hoping to do. And certainly the probabilities were skewing towards a Democratic sweep. So far, we have not seen that. It really comes down to right now, Georgia. Georgia, there are two seats that are up for re-election here in Georgia, both of which have not captured the 50% minimum that it needed in order to secure those seats, which means that those seats are going to be pushed out to January 5th, if I'm not mistaken. So January 5th, we may not know whether the Democrats or the Republicans have at least 50 seats until January 5th because of the current outcome that we've seen out of those seats in Georgia. So we don't know election due to Georgia. We don't know the outcome of the presidential election because Georgia are still counting votes. And based on the current votes that the two senators have right now in Georgia, none of them have the majority that they need in order to secure those seats. So that is likely going to be pushed out to a January 5th a vote on January 5th for those seats. So until then, we are unlikely to have a strong understanding as to whether or not we're going to see a Democratic control of the Senate or Republican control of the Senate. It seems to favor the Republican control of the Senate at the moment. And I think from the market's perspective, if you think about the concerns that investors had about Joe Biden with the Democratic sweep with respect to higher taxes, higher corporate taxes, higher capital gains taxes, higher dividend taxes, higher taxes around all around, and higher potentially increased regulation. Markets were concerned about that. So when you have a Biden victory with a split government, that, in my opinion, is actually the best possible outcome from a market's perspective, because on one side you lose the volatility, if you will, of Trump with Biden, which arguably would probably be better for the U.S. nation's response to COVID-19. And you have a split government that would prevent Biden from moving forward with a lot of these huge tax increases that he has put forth or has proposed. So from a market's perspective, perhaps the perceived stability of Biden with the lack of the ability to put through a lot of the regulation and taxes that investors were concerned about Biden with a split government is actually, I think, a strong outcome. And that's exactly what we have seen from markets here, reacting fairly positively on election night, yesterday, and today. So what we really have is, a market that is fairly strong here at the moment, given what is likely going to happen. Now, again, nothing is secure just yet, and we'll talk a little bit about, what's going to be driving markets here in the next couple of weeks, and what's going to be driving markets here for the next couple of months. On the Congress side, also, this is actually where the Democrats have actually lost some seats. So Democrats had the majority here in Congress. They're still ahead and they're still likely to capture a majority, but this is really where they're losing some seats. If you look at that map, it is largely red, and especially in the middle of the country, it is all red. The rest of the country, even though the populations are spread out predominantly here on the coast, as you can see, not as much in terms of blue, mostly red here. So this is really where some investors are concerned about the fact that whether Nancy Pelosi will be able to maintain her seat as the House, and what control the Democrats will remain in terms of the government, especially if they lose or are not able to gain control of the Senate. So investors have some concerns on this front, but largely, if we look at what's driving markets in the short run, first of all, the most important thing is the fact that the election is not over. You have 4 states that, if any one of them, we can project a Biden win, would certainly secure at least the election victory. Now, even if that happens, even if Georgia, Arizona, Pennsylvania, or Nevada, count some more votes, and we are able to call the election in one of these 4 states, that still doesn't mean that you have a peaceful transfer of power. It doesn't mean that you're going to see everything smooth sailing going forward. Until December 8th, when the Electoral College gets together what we call the safe harbor date and votes based on the outcome of the election. Until that date happens, the election is technically not over. And between now and then, quite a bit can happen. We expect that there's going to be quite a few states that's going to have to recount. There's going to likely be some concerns in terms of, or disputes in terms of ballot validity, and in terms of court cases that the Trump administration have already filed in certain states to that likely will get struck down, but that won't stop them from potentially continuing to claim fraud, claim the ability to count some of the votes, and whether some of those votes, especially the mail-in votes that came in after the election, whether those will count towards the election. So a lot can happen between now and then. So markets have reacted very positively, in my opinion. I think that the markets went a little too far too fast, and we'll talk a little bit about that in a second here, as far as where the markets currently sit and what opportunities we see. But if we look past the election, from my perspective, whether Biden or Trump wins, the long-term view of the markets is really based on a few things. Number one, size and status of the next stimulus. This doesn't matter. It doesn't matter whether Biden or Trump is in office. The size of the stimulus is largely what's going to be driving, in my opinion, the markets when we look a little bit beyond the election. When we look beyond December 8th, when we look beyond the inauguration in January, we have to look at the next size of the stimulus bill to give us a better sense for whether markets have the legs to break out from the recent range that it's been trading in, or perhaps it becomes more range bound, more sideways, and potentially even start moving a little bit lower. By far, stimulus, in my opinion, is more important than the outcome of the election for the market. The second thing that I think is more important, that's most important, is COVID cases and the response. We have a continuing spike in terms of COVID cases. We're still accelerating to the upside. We're still going exponential. That is a concern. We're seeing it in Europe. We're seeing it in the United States. We're seeing it in South America. This is a problem from the perspective of, if you look at Europe, they've had to go back into lockdown in certain places. That's not good for the economy, especially with a lack of stimulus. If you have more lockdowns, that's going to be a problem. So COVID response, COVID cases is going to be an issue. We haven't really heard much on the vaccine front for in a few weeks. We don't expect to really hear a whole lot on the vaccine front for probably another month or month and a half. And during that time, a lot can happen. And this is some of the downside risks that I see with the current market. Beyond that, before we look at taxes and regulation, which is, I think, on a lot of investors' mindset, that taxes and regulation, especially with Biden and Democratic sweep, was investors were concerned about that. I actually think above that, corporate profits is by far more important. So we have seen a fairly strong response from corporate earnings this particular quarter. Q2 was particularly strong, or stronger than expected. Q3, for the most part, also has largely beat market expectations. Now, the reaction from equity markets actually has not been particularly strong. We've seen a lot of beats where the stock hasn't moved substantially higher. We've seen even a few beats where the stock has moved lower, and stocks that miss have moved substantially lower here. So corporate profits, in my opinion, more important than the concerns that we have with taxes and regulation. I think taxes and regulation really is the last concern that many investors have in the current market environment. So when we look at drivers of the market, and you look at this on the balance, there is a lot of downside risk here to the current market rally that we see. And when we look at where the current market sits, it kind of lines up with the technicals. The potential downside risk that we're seeing lines up with the fact that the markets have been fairly range bound, markets have been somewhat indecisive, and we're trading near the top end of that range. So these are some of the things that I think are worth paying attention to. So how have markets responded to the election? And I think, anyone who's been alive here over the past couple of days have seen a huge positive response to the markets. On election day, we saw about a 4% move to the upside overnight on the NASDAQ, a little over 2.5% here on the S&P, and that has continued going into today. So when we look at what's happened since then, what we can now draw is a very clear established range. A very clear established range here on the S&P 500, with the lower end of the range around 323 or so, and the upper round of the range around 350 or so. So what we have now is established a range. And the reality is the fact that the markets are pricing in what I believe reflects a Biden victory with a split government, because again, Biden victory with the split government, from a market's perspective, is likely the best possible outcome. You have a president that's less volatile, if you will, and then you have a government that would perhaps prevent him from enacting some of the more higher tax increases and the more stringent regulations, perhaps, that he might be looking to put in place from a climate change perspective, from an energy perspective, from a financial perspective, even from on technology perspective. Perhaps a split government could be a hindrance, if you will, to some of that. And the markets have reacted very positive to that. And especially if you look at NASDAQ 100 versus SPX, we've seen a strong outperformance of the NASDAQ 100 versus SPX. But the one thing I will point out is that small caps is one of the few winners, or is even a bigger winner out of this election. Small caps have managed to break back above recent highs. Both the S&P and the NASDAQ 100 has not managed to break above prior highs. It is still trading below prior highs. IWM broke out above 165 today. Small caps rallying here. So this is really a fairly strong and unified response to this election outcome from the broader markets. SPY trading between 320 and 350. From my perspective, I think this is a trading range that's going to hold for a little bit. I don't see a strong catalyst at the moment, at least not for the next couple of weeks, that drives this market substantially higher outside of this range. So 320, 350 on SPY, 260, 295 on QQQ, or the NASDAQ 100 index. The one thing I will point out here is that market breadth hasn't been particularly strong. Look at Chaikin and money flow on the move to the upside, not particularly strong, meaning the push to the upside hasn't been on substantially strong volume. The markets are also short-term fairly overbought here. You've had a very big move here to the upside from 323 to 350, 351 over the just 4 trading sessions. That's a big move over the last 4 trading sessions. And you're approaching these resistance levels near the top end of this range. So from my perspective, the risks are a little bit to a bit of a pullback here after what seems like a bit of a knee-jerk reaction. And I think this is really where investors, you want to be a little bit contrarian here. I don't think you want to necessarily chase everything here. Being contrarian, I think, can provide some interesting opportunities in this market. That's part of why we went long in international paper here on our daily play here today. We specifically looked for a stock that we liked from a fundamental basis that was starting to see some rotation, starting to see some relative strength, but was down 3% yesterday on a day when the markets were up 4%. Being contrarian, I think, is going to will pay off here in this market, especially over the next few weeks. And we've had this very strong knee-jerk reaction to the upside. I think you're going to see some of that fade a little bit, even because the markets have largely priced in what the outcome of the election is going to be, and I don't particularly see a strong view as to why markets will break out from this upside, especially because over the next couple of weeks, you're going to see lawsuits, you're going to see recounts, you're going to see some instability, if you will, perhaps some protests. I don't know what the world is going to bring here over the next couple of weeks, but until we get past the December 8th date, I think that markets are going to struggle a little bit in terms of getting much more higher, substantially higher here from now. So that's my broader take here on the markets. And I do want to point out, I do want to take a look at a few charts here. If you look at SPY, this is what I'm referring to, that trading range between 320 and 350 or so to the upside. However you want to draw these charts, whether you want to draw it at 350 or 355, I think it's somewhat irrelevant. It's somewhere, as long as you're somewhere in that range. You can even draw 323 to 352 or so if you want to be a little bit more accurate. But if you look at this across the board, you see it on SPY, you see on QQQ. QQQ is certainly around 260, 295 or so on the upside. But like I said, IWM has broken out above its recent highs. So we talked about 160 for quite some time on IWM, because if we scroll out here and look at IWM on the weekly chart, if we look at IWM on the weekly chart, as you can see, 160 has been a very strong resistance level on IWM for a long time. We broke out above it a couple of weeks ago, but failed to hold. And now we've recently broke out above it and pushed higher above that recent high. That's a pretty bullish setup here. I think that puts IWM back into that 170, 172 all-time high in range to target those moves to the upside. So broader markets are pretty strong here, right? But I do warn, I think that it's important to potentially be a little contrarian. I think that will pay off here in the broader markets, especially also if you look at RSP, which is the S&P 500 equal weight index, also showing a fair amount of strength here, actually rallying almost a little over 10% here over the past 4 or 5 trading sessions, actually a little stronger than the S&P 500. So regardless of where you look, there's a lot of strength here in the markets. Markets, again, are responding very positively to the outcome of this election, regardless of who you support. Markets are saying that this is a good outcome for the election. And then if you look at things like bonds, right, we've had a big move to the downside here on bonds. 10-year yields declined 17 basis points, which is close to almost 20% move to the downside here, from about 92 basis points all the way down to about 71 basis points here to the downside on election day. That's one of the biggest moves we have seen from fixed income in a long time, in a single day. And this was mostly due to the fact that there was there's a concern that the amount of stimulus was going to be substantially smaller than what the market was pricing in. However, the one thing I will point out here is that the 10-year yield has been climbing for a couple of months now since it had an all-time low here around 50 basis points. And despite the move to the downside, the extremely fast and violent move to the downside, it still remains in this uptrend. It just happens now be at the bottom end of that range. So that means that you have, in my opinion, still this upper trend line here intact here for 10-year yields to continue moving higher. And I think we could target anywhere in the 90 to 100 basis points here by the end of this year. So there's plenty of ways to play this, whether you want to play this using TLT as a potential short. We've been talking about this downtrend here in TLT for quite some time. Just like interest rates, TLT remains in this downtrend here. You've had a big move to the upside to the upper bound of that range, but that has not invalidated that range and is likely to still see and it still has the opportunity, in my opinion, to target here to the downside. And the beauty of a trade like this is that when you're near the upper bound of that range, you can take a short position. And if TLT continues to move higher, you are only risking about $2 to $3 to the upside before you can say, I'm wrong on this trade. This channel is not holding. Cut your losses and move on. But you still have about $5 to $6 to the downside in terms of potential reward. So your risk to reward here is substantially stronger. And especially if you overlay options on this, I think this is really where you have some opportunity to play an interest rate play here as well. And for those of you that caught Carter's trade on options action last Friday, he looked at KRE. That's another way, in my opinion, to play the move here on rates. I actually like KRE a little bit better here. Rather, I shouldn't say that I like KRE better. KRE has some additional risks, but has more upside, in my opinion. KRE, the risk to the downside is really just the systemic risk that you have with consumers not being able to pay their mortgages, not being able to pay their loans that have been pushed aside for now till December. People can't be evicted as of moment. Maybe you're going to start seeing some of that pick up in January and February. That's the risk that you have here with some of the KRE or some of the banks, regional banks. But regional banks providing some good exposure here to the recent uptick here in rates. So TLT, you're seeing some, in rates, you're seeing some movement here. You can play that through TLT or KRE. Another one that I want to point out here is GLD. Now, I talked about gold here on Tuesday when I talked about the Bitcoin rally. We talked about the breakout here in Bitcoin above 12,000 on Tuesday morning. That rally has continued. That rally off of the election, especially with stimulus continuing to likely become, perhaps even faster with this new election, Bitcoin has really taken off, and that has put gold back into this bullish phase. So we had this big move in gold, which for some of you that were following us on Daily Play, we caught pretty much that move here on gold using an options play. And then since then, we've had this long consolidation range, which from my perspective is healthy because gold went a little too far too fast. It needed some time to digest and consolidate, and we just got the breakout here today. And I think this is the potential entry point for gold to retest that 194 high. If you look at gold, going back to 194, that's the all-time high. Well, 185 was the all-time high. Around 185 was the all-time high back here in September 2011. We over the past couple of in early, in July, in August, we got up to about 194, consolidated for quite some time, and now I think it's going to push back towards that 194, 195 range. And if it can manage to get back above that 194, 195 range, that's really where you have a lot more upside here for gold. That would be brand new territory for gold where we've never been before. So this is where, if you missed out on the initial move here in gold, or maybe you tried to buy some, during these and you weren't able to successfully get in, I think now is another opportunity to potentially look for a long position here for gold, as concerns about continued money printing, concerned about a lower dollar, that's going to give you higher gold pricing going forward. So these are some of the things we're going to cover here during our Tuesday morning market outlook session here. But largely what I do want to provide here is, instead of just me sitting here talking about my thoughts, I do want to provide a forum for everyone here to ask some questions. So if you have some questions, feel free, type them into the Q&A window. There's a chat window and a Q&A window. Please type your questions into your Q&A window, and I will try to answer as many questions as I have time for here today. Today is, less so about me talking and me explaining to you what my thoughts are. Let's have more of a conversation, allow you guys to ask some questions here. So Ralph is saying, today, Lee Bull, Schwab, who's one of the strategists at Schwab, stated historical data is when markets are positive the day after election, then the next couple of months are positive. What do you think? So Ralph, we looked at seasonality. I think it was on this Tuesday. We looked at it on Tuesday morning session. So if you want to go back on YouTube and look at that recording, seasonality for US elections is extremely strong in December of an election year. 82% of the time during 82% of the time during an election year, December is up, and it's up on average about 1.2%. I think was the number that we had. So I don't know about the next couple of months is extremely strong. So November is up, I think, about 52% of the time, so that's not particularly strong, but December is up 82% of the time. So December is significantly stronger than November for an election year. So yes, I do agree. However, keep in mind that the sample size of that is fairly small. Most of these seasonality analysis were done post 1929, the Great Depression. So if you look at how many elections have there been since the Great Depression, it's not many. It's like 22, 23 elections. So it's not a huge sample size. So you don't want to put too much weight behind it. But again, look at how the markets have responded and look at just from a fundamental perspective. It makes sense. It makes sense for why Biden with a split government is the best outcome from a market's perspective, because you have what is at least optically a president that's more stable and you less volatile, rather, I think is probably the best term. And you have concerns about that candidate with taxes and regulation removed because of the split government. So fundamentally, technically makes sense, and the historical data matches up with that. Can't we say Biden is our new president and take it from that? So at the end of the day, a lot can happen between now and December 8th. So I'm not willing to make that call before other people make that call. So I'm going to let the experts on that front make that call. I'm here to look at how markets respond. In October, the VIX went into backwardation for several days. Yeah, but VIX is back into contango right now. So, from my perspective, I actually think the VIX maybe overshot a little bit to the downside. VIX is currently trading about 27 or so. If you zoom out a little here, right? So 27 is pretty low given the world of COVID-19. And I think that you could see a little bit of an uptick here, especially, I don't know what's going to happen in the next few days. I don't know what the Trump administration is going to try to do in terms of trying to stay in power. We know that he hasn't committed to a peaceful transfer of power. So anything can happen. And I think it's worth buying a little bit of protection if you're concerned about that. And keep a long position in your portfolio, but buy a little bit of protection as buying protection right now has cheapened a bit over the last couple of days. Wayne is saying, what do you make of this and any timing projections for this sometimes forward-looking indicator? Wayne, which indicator are you referring to? I'm not sure which one you're talking about. Sam is saying, I traded a put credit spread on Wayfair on October 12th during the downtrend. I took the loss and got out when W hit 250 in the debit, before earnings. Can you analyze this play? So Sam, as much as I would love to help you with that and analyze that, if you don't mind, send me an email at info@optionsplay.com with a little bit more specifics as to what you traded, when you got in, when you got out. That'd be helpful. I don't think that the election special is necessarily the best time for me to look at your specific trade on Wayfair. So send me an email at info@optionsplay.com. Chris is saying, how much of the recent tech stocks increases due to the Robinhood effect since they flock towards tech stocks? I would say that the Robinhood effect was predominantly this move here to the upside. And that's about it. And even then, we sort of after the fact learned that there were some very large trades from SoftBank that drove some of that to the upside. It became almost like a self-fulfilling prophecy here, where you had a lot of investors buying really far out of the money options, and then you add on top of that some large institutional players that placed some large bets that required market makers to actually buy a lot of stock to hedge it, and that caused this whole delta hedging, thing that we talked about here right during the September sell-off here. So I would say it's less due to the Robinhood effect certainly was there, but I would say largely it was this. I haven't heard too much about the Robinhood effect recently. A lot of those traders that that were trading this got basically blown out of their accounts immediately on that September sell-off. So you do have a lot of Robinhood traders that effectively left the markets due to that. Talia saying, hello, and thank you for this amazing platform. I purchased a bunch of calls today, mostly ending by December 24th. I believe you said last time not to close calls before expiration. Why is that? Talia, I've certainly never said that don't close calls before expiration. First of all, you can't, if you're referring to exercising a call, yes, you should never exercise a call before expiration, because you'll make more money by selling the calls than you will make from exercising the calls. That's, I think, what you were referring to. If that's the case, close the position. Don't exercise your call options. So if you bought some calls over the last couple of days, you've made your money, sell those call options. That's how you're going to be able to profit from your trades. My second question concerns cover calls. How do you get out of a cover call? So to get into a cover call, you have to sell the call, right? So for example, let's say we sold a cover call on SPY. So let's say I sell the December, in this particular case, what I did is I sell to open the December 373 calls. If I want to get out of it, all I have to do is buy to close the same December 373 call. I actually have a video on this on YouTube. It's called Entering Option Orders on our YouTube channel. So if you want to learn more about opening and closing transactions, go to our YouTube channel, youtube.com/optionsplay. I'll send a link to you in the chat window. And we do have a recent video on this topic. If I want to get rid of the stock earlier than what the cover call is for. Oh, I see. The question is, how do you get out of a cover call if I want to get rid of the stock earlier than what the cover call expires? So you can't get rid of a stock that you own a cover call on until you first buy back the call. So if you own a cover call and you want to get rid of the stock, you have to first buy back the call, then sell the stock. You can do both in one transaction. Most brokerage firms allow you to trade both of them in a single transaction, but you must either trade them both in a single transaction, or you must first close the call, then sell the stock. Third question is, what does the W alongside expiration? The question was, when you go to your when you go to the expiration date, some of them have a W, other ones don't. The W ones are the weekly options, as opposed to, so if we look at, I don't know, let's look at Apple real quick. The W ones just simply refer to their weekly options. All of them are identical from a trading perspective. The ones with the Ws are the weekly options. The ones without a W are the monthly options. Dean is asking, hypothetically, Biden is declared the winner on December 8th, and the sentiment is that the Senate remains Republican. Is the low end of the trading range SPY 320 and QQQ 260? Is the low end of the range challenged and perhaps even broken through to the downside? So the question is, if there's a Biden victory on December 8th and the Republicans control the Senate, will we see a challenge to the 260 level and break below it? From my perspective, I don't think that the outcome of the election would be the reason that that gets challenged. I think there are other reasons. First of all, if we just look at the election perspective, like I said, a Biden victory with the split government is likely going to be more positive for the markets. That's why we've seen the rally in the markets over the past couple of days. So no, not because of the outcome of the election would I think that we would challenge the 260. But like I said, the outcome of the election, in my opinion, is unlikely going to affect the markets substantially going forward. Long term, what's more important is the stimulus and the size of the stimulus. I think with a Biden, with a split government, you're likely going to see a smaller stimulus. So somewhere in the 500 billion to maybe 1.2, 1.5 trillion dollar range. And the size of that stimulus, in my opinion, will have a much greater effect on where markets will be on December 8th or going forward than anything else. You also have, a fairly, fluid situation right now with COVID. We're continuing to be on an exponential path with COVID. We have higher hospitalizations. The number of cases that are returning, number of tests that are returning positive continues to climb. That's concerning to me. That's why I'm looking towards EEM, where I'm looking to get some exposure out of Asia. Those markets have COVID on a much better under control. Those countries are not going into lockdown. They're coming out of lockdown. They're flourishing. Their economies are back open. We're talking about going back into lockdown. If you look at mobility data, if you look at restaurant data, they're starting to trend lower here in the United States. This is concerning to me as an investor way more than the outcome of the election. The question is, sorry, I'm late. Can I get today's recording? All of our sessions are recorded. They are always posted to YouTube afterwards. So you can sign up using, or you can see all of our recordings on our YouTube channel, which I just posted a link into the chat window. And we will send you the recording after we finish here today. Questions about specific stocks. I'm going to hold off on taking questions about specific stocks today because I do want to focus a little bit more on the macro side of things. I think that you want to focus at this point more macro than specific stock names, focus more on ETFs rather than specific names. I think specific names are going to mean a little bit less over the next couple of weeks. And then once we get past the election, then we can start going back into corporate profits. Earnings season is already kind of mostly over. The big names have already reported. There's still quite a few names that are going to report here in the next couple of weeks, and we will cover some of that. But largely, I think focus more on macro in my perspective. There was a question about Tom Sosnoff event next week that it took you to the normal Thursday event. Okay, JB, I'll take a look at that. We'll still be sending out multiple emails between now and then to make sure that you sign up. So next week, for those of you that are unaware, I'm going to have Tom Sosnoff back here on Tuesday. We're going to be talking about the platform. We're going to talk about trading ideas. We're going to talk about the election. So look forward to that. I apologize if the link was wrong, but I will make sure that we send that out. And actually, if everyone holds on here for 1 second, I will send that out so that you have the correct link. I do want to make sure that people are able to register for that event. I know many of you are looking forward to having Tom back. So let's take a look here. I see what you mean. Okay, if you're signed up for next Thursday's event, you will be signed up for the Tom Sosnoff event next week. So we will just add an event as long as you're signed up for the Thursday normal events. That will you will get the invite here for that Tom event. So I apologize for that, JB, but it looks like you're all set. Jose is asking for views on SLV. So SLV is basically the exact same thing as GLD from a view perspective. SLV more of an industrial metal rather than a precious metal, less of a hedge against, stimulus, but setup is basically the same. Any views on Baba IPO? So I don't think you mean Baba IPO. I think you mean Ant IPO. I don't particularly have a strong view here. I think Ant will likely, for those of you that are unaware, Ant was recently filing for IPO. I think they were supposed to IPO either today or tomorrow, and was pulled by Chinese regulators. You can follow the story. It's an interesting story. I think this is the Chinese regulators flexing their muscles, showing Jack Ma who's in charge, and I don't necessarily think that what they were saying is wrong per se. They're effectively becoming a technology company, but for all intensive purposes, they were a financial institution, and the government felt that they needed more regulations around being a financial institution rather than a technology company. They were effectively selling themselves as a technology company. They were trying to value themselves as a technology company. But largely what they were offering is financial services. They're going to likely file for IPO again, maybe a few weeks out, maybe a few months out, but they'll get there probably at a much lower valuation. Baba has taken a hit as a result of it, but the hit wasn't particularly large. So I think that largely you're going to have a continuation. Baba still remains on a fairly strong path here to the upside from a relative strength perspective. So I don't know that there's a whole lot to report because it's just a non-event. Nothing happened effectively. They were going to go IPO, which I bet if they did go IPO, Baba stock would probably rally. But until that happens, until there's a little bit more enthusiasm, a little bit more clarity that there is going to be another IPO, I think Baba stock is just going to stay where on the same path that it was originally. What are your thoughts on TMF and UPRO? I'm not familiar with either stocks, unfortunately. So I don't have a whole lot to add on that. Macy's bullish. I agree with Macy's. This is one of the stocks that I've started building a position in. We've sold some puts here on Macy's. Selling puts on Macy's have been, you can collect over 10% of the underlying stock price selling some puts here on Macy's. So this is one that we like. We've showed you a few weeks ago some of the department store economic data that we've seen substantial increases in traffic to department stores. Whether you play that through Macy's, whether you play that through Nordstrom's, these are all ones that, are starting to see a bit of a turnaround here. I have a question here. How old am I? I actually just had my birthday here a couple of weeks ago. I recently just turned 34 years old. I've been getting a lot of questions about NEO, so I'll talk about it here. NEO is on a very strong path here. Has the stock gotten ahead of the fundamentals? Absolutely. There's no question about that. But does that mean that the stock is going to come back down? Not really. Momentum is by all means, overextended. As you can see on both daily, weekly charts, severely overbought. So you have high risk of pullbacks here. So from my perspective, if you want to chase a name like this, wait for pullbacks. Every couple of weeks or so, you have some level of a pullback. Wait for a pullback to get into a name like NEO. What charting service do you use? This is a TradingView. I use TradingView for these sessions because TradingView is one of the few charting indicators that really covers global coverage, regardless of whether you're using U.S. International stocks, indices, and one of the great things about TradingView is that you can do math on it, meaning if you wanted to take NEO and look at it, a comparison to SPY, you just do NEO divided by SPY and you get a relative chart. So if you want to see how Apple is doing compared to Microsoft, you just do Apple divided by Microsoft. And you can see, is Apple outperforming Microsoft or underperforming Microsoft? This is a very important tool for chartists who want to look at relative strength. So that's why I use, like to use TradingView. Does Bitcoin use options? So there is no OCC listed exchange that offers Bitcoin options. There are some Bitcoin options exchanges out there, but they're not regulated. They're not, I don't think institutional traders are trading on them. You have much more of a retail flow, maybe some hedge funds that are trading it, but and Bitcoin is not very liquid from an institutional perspective. So Bitcoin options, I would imagine spreads are pretty wide on those. Do you see the risk of a large correction due to the election problem? So I do see some risk. I do see some downside risk, but I think the risks are largely going to be contained within this trading range. I think that, it would take other external factors to push the markets below those support levels or this range that I'm referring to outside of this range. Some of the things related to stimulus, related to COVID, corporate profits, those are the things that are likely going to cause this to break down below that range, not necessarily the election, in my opinion, because largely, regardless of what the outcome of the election is, the markets are on a trajectory higher. I don't think any outcome of the election is going to necessarily derail that in a big way, in my opinion. What's your outlook on the VIX after the election? I think I've covered that already. Tom is asking, what's the best way to get long volatility in the indices, but reduce time decay? The best way to get long the indices is to use a vertical spread. So if we use NQX, which is a NASDAQ 100 1/5 index, the best way is to spread it, right? So buy a long-term call and sell a call against it. You don't necessarily have to trade a vertical. You can also trade a diagonal or a calendar spread, but spreading it out is what you generally want to do. That's going to help you reduce the cost of the long call. So let's say you bought a 2,400 call and then sold, let's say, a 2,500 call against it. That's going to allow you to reduce your cost, reduce your time decay, because you're short an option that's going to offset most of the time decay of that long option. So calendars and diagonals are probably one of the most efficient ways, in my opinion, to offset time decay. Sai is saying, thanks for all the info. It's quite useful. You're very welcome, Sai. Sanjay is saying, I have some questions about the OptionsPlay site and where can we find all these details? Sanjay, I think the best way to ask us is, on your platform, you can have this button here on the upper right-hand corner. Send us your question there about your platform. We'll be able to respond to you there. And EV stocks in general. So yeah, EV stocks, whether you're looking at stocks like rather ETFs like TAN, which is a solar ETF, whether you're looking at ICLN, which is the clean energy ETF, big moves to the upside, most of it in response to Biden victory, because Biden clearly wants to rejoin the Paris Accord. He wants to make clean energy and renewables a big initiative in terms of infrastructure spending. So these stocks are moving in conjunction with that. If you're looking at electrical vehicles, Tesla is an obvious choice, but the less obvious choice, and one that I've been talking about for the last couple of months, has been GM. GM is they're restructuring lately. They've been downsizing their company, which I think is good for from a financial perspective. They have, out of the U.S. manufacturers, in my opinion, the best portfolio from an electric vehicle perspective. They have 14 electrical vehicles in their portfolio between now and 2024. They focus on more higher margin electrical vehicles, the same way Tesla focused on the higher margin Model S first before moving on to the Model 3. So electrical vehicles, NIO certainly is another one that I think many investors are looking at. So depending on what type of risk profile you're looking at, you have NIO on one end that's extremely risky, Tesla in the middle, and then GM on the lower end of the spectrum. How to work with Site. Sanjay, I think that's related to your previous question. So please send us a question using that platform. And I'm doing a webinar in a couple of weeks on the whole website. We're doing this webinar on Thursday, November 19th. We're going to talk about OptionsPlay's tools and services. So I hope that you're able to join us for that. What's your view on USD CAD, dollar CAD? So dollar CAD, continues to be on the strong move to the downside. If you look at the dollar index, very similar to this. So, further downside here for dollar is likely, in my opinion, especially when you have this large stimulus coming down. So dollar CAD, in my opinion, I'd like to see a break below this 130 level here for this to continue lower. But long term, probably more bearish. Where do you see silver going from here? I think we just talked about SLV here. Jason saying, I have some SPY November 320 naked puts. Would you spread that? Jason, it depends on whether you're long those puts or short those puts. I'm guessing when you say naked, you mean you're short those puts. SPY, you're short the 320 naked puts. Would you spread that? That's more of a risk question for you rather than a strategy question. Meaning, do you want to take on the risk of being naked short, SPY? I'm sorry, naked long SPY effectively with the short SPY. So that's a question from a risk perspective, in my opinion. If you don't want the risk, spread it. If you're happy with the risk, don't spread it. How long, hi Tony, do you have long-term views on Bitcoin? If so, what are they? My views on Bitcoin is what I said on Tuesday. It broke out from 12,000. Next is probably going to be 20,000. Do you think DPZ will remain below 400? I haven't looked at Domino's in a while here. With the rising number of COVID cases, if you look at the restaurant data out of OpenTable, looking a little bit weak, I think you could get some short-term support here for Domino's. But long-term, I don't see a strong thesis for why Domino's moves substantially higher. But I certainly think that you could get a rebound above 400 here on Domino's. What option strategies are suitable for such volatile markets? I would say calendars are suitable, credit spreads are suitable, and even some debit spreads, especially since volatility has taken such a big decline over the past 2 days due to the election outcome. Now is an opportunity to buy volatility. So buying debit spreads, as volatility increases a little bit more, selling credit spreads and trading calendars and diagonals. What do you think about a possible pullback from profit taking tomorrow after excessive run-ups this week? I think the probability is fairly high, and I think that's exactly what I laid out here in this particular slide here, is that you have declining market breadth, short term you have an overbought conditions, and you've approached these resistance levels, which are these 350 on SPY and 295 on QQQ. So I think that you have a very possible profit taking tomorrow and a bit of a pullback here. When would you buy GLD then? I think now is the time to buy GLD if you haven't already bought it. Some of the miners also as well, that was the trade that Carter laid out last week on options action on GDX. So whether you're playing the miners or gold itself, I think now is the time. Stefano, hi Tony, where do you see a potential pullback on the SPX? I think that's exactly what we've been talking about here today. It's really over the next couple of days inside of this trading range. Samir, what do you expect will happen to the markets if the Democrats take the Senate this week? I think you're likely going to see a negative reaction to that. Now, I don't think that can happen because, again, the 2 seats that are up for in Georgia, we're not going to see that until January 5th. So, but if the Democrats take the Senate, markets will likely react to that negatively. I should say that with a grain of salt because, if the Senate, if the Democrats take the Senate, then you have a very high probability of a sizable stimulus package. I'm talking 2.2 trillion, 2.5 trillion of stimulus. That's going to have a short-term, very positive effect on the broader markets. Long-term, higher taxes, more regulation is going to be a bit of a drag, but that's not an actual bearish view on the markets. It just means that the markets are less bullish. So keep that in mind because if the Democrats do take the Senate, then I think short term you might actually have a very strong positive reaction. Is there a way to use options for Bitcoin in a normal brokerage account? There is not. Considering we are in overbought position, is it worth betting on any of the technology stocks related to 5G like Qualcomm? I think the two are completely separate. Markets can be overbought and you can still continue to bet on moves like Qualcomm. But I will say the move in Qualcomm is already over. You've had the big move to the upside here. I think you're a little late on that, to be perfectly honest. If you were short the election and markets push past your short position with recent rally, keep holding. I would say it depends on what kind of short position you have. Did you sell a credit spread or did you buy a debit spread or did you buy puts? I think if you bought some puts and they're kind of worthless, I think it's worth holding on to them for a few more days. First of all, I think markets could pull back a little over the next couple of days, and I am concerned about some downside risk. Whether it's lawsuits, whether it's recounts, I don't know what it's going to be, but there could be some downside risk here in the next couple of weeks. So it really depends on what kind of short position you have, when it expires, and whether or not if you hold on to it, you will see substantially further losses or not. Depends on whether you're on the right side of time decay or not. If you're on the right side of time decay, I'd say hold on to it for a little bit, because I think that you could see a little bit of downside. Tony, if Trump does pull off a win, do you think VIX will spike again? I mean, from my perspective, whether Trump or Biden wins the election, it's not going to have a huge, effect on the broader markets that much. To be perfectly honest, it'll be more of a shock from a country's perspective, but I don't think markets are going to respond too differently between Trump versus Biden winning here, in my opinion, especially when you have a split government. That means more than who is government. Intel bullish. Intel has been kind of basing, but recently kind of continued to move to the downside here. So I don't particularly see a strong case for a bullish view here on Intel, to be perfectly honest. You have the event coming up here in a couple of days on November 10th, which is 5 days a week, 5 days where Apple is going to be announcing, again, moving all of their MacBook, or at least the lower end MacBooks, to off of Intel chips. That's going to take a hit there. So I think you have far better prospects in the semiconductor space than Intel. Mark is saying, good afternoon, Tony. When investing long-term in the S&P 500 index, does buying SPY work for that? SPY is probably one of the best ways to buy the S&P 500 index. But I will say, if you're trying to be a long-term investor, there are even cheaper options than SPY. Vanguard, Schwab, Fidelity all offer very, very low fee SPY or S&P 500 ETF. So if you're really looking to invest, that might be even better. But if you're looking for liquidity, if you're looking for being able to sell options on it, SPY is way better. If you're looking to invest in an ETF, there are lower cost options than SPY. Does lack of volume on this market rise always worry you at all? It does, and that's exactly what I said here. Market breadth is declining. That's concerning to me. That's part of my thesis of why I think the upper bound of this range will hold. If we saw strong volume here to the upside, that would indicate potential broader move to the upside. But the fact that we haven't seen strong volume on this is concerning to me. What about gold miners? Gold miners and gold, very similar. Gold miners is more of a leverage play on gold, but if you're long gold, gold miners is very much a viable trade for that. Is there a way to trade? Is there a way to trade the VXN? If not, what's a good hedge trade right now? VXN is not a great hedge. VXN, you're going to get exposure to volatility, but it's not a great hedge, because if I told you markets are going to decline $10 or 10%, how much does the VIX move as a result of that? The answer is you don't know. That's why it's not a great hedge, right? If the market declines 10%, I can tell you that SPY is going to be down 10%. That's why SPY is a good hedge for a downside move. But how much is VIX going to move up if the markets move down 10%? The answer is you don't know. So that's why, if you're looking to hedge, use the actual vehicle that you're long to hedge with. So if you're long technology, buy puts on Qs. If you're long, broad-based portfolio, buy puts on SPY, or short futures on SPY, or short futures on the NASDAQ 100. Those are much better ways to hedge than going long volatility, because the two are not perfectly correlated. Hi, Tony. Do you anticipate the same trends in growth stocks until the 8th of December? How do you feel about financial and energy until we get election results? So not in particular. I mean, if you look at small caps, are outperforming growth stocks. So we've seen the slow rotation into value, and it's actually been accelerating as a result of this election. So I'm not as bullish on growth stocks. You've just seen a knee-jerk reaction from growth stocks, but I don't necessarily know that it's going to last. What do I think about financials? I like financials, but again, I like KRE a little bit better than XLF. This is what we talked about last Friday on Options Action. KRE gives you exposure to regional banks. These are the ones that are actually exposed to financials. If you look at XLF, There's Berkshire Hathaway there, there's American Express, there's S&P Global. These aren't truly financial institutions in that sense. So XLF has some issues from that perspective. So I like KRE better. So I like financials, but XLE, there's nothing to say on XLE other than it's a one-way street down. The writing's on the wall. This has been happening for years. Before Trump became president, after Trump became president, the decline of oil is been in place for a long time and will continue to go down. That's my view on energy. Look at renewables, look at batteries, look at the future. The future is not oil and gas. Even if you get a Trump victory with a full Republican government, it might move the needle a little bit on energy, but long term still declining, sector that's going to virtually be wiped out in the next 10 to 15 years. Thanks, Tony. Great election update. Do you anticipate any decline or slow in consumer spending in the near term? We've already seen a bit of a slowdown in consumer spending, whether it's because we're heading into the winter months and people are doing less outdoor dining, which is one of the few places that we are still spending outside of, consumer electronics, which remains fairly strong. The one place that still remains fairly strong consumer spending is housing. Housing is strong, but if you look at restaurants starting to decline a little, if you look at the fact that unemployment stimulus, has left, people are already starting to tap their savings. That is going to be an issue here for consumer spending. So unless there's more stimulus, I think you're going to see a slowdown in consumer spending. What is a good way to play VIX to the upside? Go long VIX futures, buy VIX options. Those are all ways to do it. When VIX goes up, does that necessarily mean markets go down? No. When VIX goes up, that means volatility is up. It doesn't necessarily mean that the markets go down. Now, there is a very high correlation between markets going down and VIX going up, but the two are not the same thing. They are very highly correlated, but they're not the same thing. How Amazon looks technically in short term and how to play with options. So, Amazon is range bound, just like the broader market. So from my perspective, wait for a move to the downside or to the upside to play it. From my perspective, if you get to the upside, I'd sell some call credit spreads. If you get to the downside, buy some sell some put credit spreads down here. Maybe buy some put debit spreads up here and play for a continuation to the downside. Do you think it's time to build long-term SPY shorts? Terry, I don't believe that it's a good time to build a long-term SPY shorts. And it really depends on how you would build those shorts. Are you buying puts? Are you shorting futures? Are you shorting the stock? Those are three very different ways of doing it. So the question for me is really, how are you building your shorts? That's more important than because at the end of the day, if you believe markets are going to go down, you should build a short. The question is, how do you build that short? Michelle is saying, thanks for your presentation. Short question. What is the indicator exactly named that you show CMF? CMF is Chaikin money flow. So this green indicator here to the bottom, that is the Chaikin money flow. Alan's saying, is there any way to see large amounts of money or spot large orders of any stock? What study do you use? The only way to really spot large institutional orders is by looking at level 2 order books. But unless you're going to sit there and watch the order book all day long, hard to do. There are some services that try to detect these things and tell you when that's happening. But again, institutional orders are less likely going to have an effect on short-term views of an underlying stock. They have generally much more of a longer-term view. So if you see an institution building, a $50, $100, $200 million position in a particular stock, that may have a longer-term effect, but short-term, it's not going to have much of an effect. Would you expect electric car manufacturers such as Tesla to break out to current trends given the election results? So, long term, I agree, but I don't necessarily know that the election itself is the catalyst that happens, because any of the climate change initiatives that Biden wants to put in place, that's not going to happen overnight. The same way, the Trump tax cuts took 2 years to put in place. The climate initiatives that Biden wants to put in place is likely going to take a lot of time, and it's going to be difficult for him to do with the split government. California moving towards, fully electric vehicles by 2035, that I think has a larger impact on things. So from my perspective, you should have a mixture of electrical vehicles. If you believe in that as a thesis, don't just put all your money in a single manufacturer. Think about GM, think about Tesla, think about NIO, think about a few other players, and kind of diversify your risk that way. For Chinese electrical vehicle stocks, do you like BYDDF, LI, or EPEV? So Wayne, I know none of those stocks. So unfortunately, I don't have a lot to comment on that. Do you see silver even stronger than gold? Not really, because generally speaking, silver is more volatile than gold. But silver, is more of an industrial metal, and it has more of an impact to kind of the speed of the recovery. We saw silver outperform gold for a short period of time, but silver is just more volatile than gold. I don't necessarily know that long term it outperforms gold. Do you think it is a good idea to sell NDX 1300, 1350 call spread December 18th? That's a pretty far out of the money credit spread. That probably means that you're collecting not a lot of premium here for that, and you're taking on quite a bit of risk. So let's take a look at that. NDX, the question is, should you sell a 13,000, 13,500 December 18th call spread? So bearish, call vertical, December 18th. 13,000, which is a 21 delta, and then selling a 13,500, which is a 10 delta. Yep. So I mean, here's what I don't like about this trade. You're risking $24,000 to try to make $3,000. Do I think that this is a relatively high probability trade? It is. You have about an 85% probability of profit. But there's also a lot of catalysts that could potentially move the markets between now and December 18th. I don't love the risk reward on this particular trade. Do I see NDX at 1,300 or 13,000 or 13,500? Not really. But I don't love the risk reward of this particular trade. But if you are comfortable with that risk reward, by all means. But I'm telling you that that's what we call picking up pennies in front of a freight train. All you need is one good month. Maybe another whale comes in and there's a lot of Robinhood call buyers, and you get this huge rally like we saw back here in August. You wipe, for $3,000, you lose $24,000. That's not the type of risk to reward ratio I like. I'd much prefer taking on much more risk. I'm sorry, much smaller amounts of risk in exchange for much higher amounts of reward. So that, if I collect $10,000 up front, and if I lose 17,000. That's a risk reward that I'm much more likely to take, even though it has a lower probability of profit. What's your opinion on Tesla? I don't have a strong opinion on Tesla. Tesla's been very much range bound here to the, right here. I do think that you're more likely to get a breakout here to the upside. I think when you get that breakout to the upside, that is a potentially a bull signal or buy signal here for Tesla. But I like to see that breakout first. TLT pays a monthly dividend with ex-dividend on the first of the month. If I wanted to buy weekly cover calls, when do I place the trade so I can also collect the dividend and not worry about having my stock called away because of the dividend? Mark, first of all, I don't know what you mean by when do you place the trade so that you can also collect the dividend, because you'll always collect the dividend as long as you're long the stock. This is why we don't sell weekly cover calls. And I don't see why you should sell weekly cover calls. I think you should sell 45-day options on TLT, buy it back 21 days from expiration. This way you will never have to worry about being called away due to dividends. You can do what you're doing, but you're going to always be at risk of early assignment due to a dividend. That's the risk that you're taking when you're trading these weekly options. That's why we don't trade weekly options, or at least options that expire 1 week from today. That's why we sell those 45-day options, wait for the decay down to about 21 days, and then start rolling them again. This way we never have to worry about assignment risk due to a dividend. So close the call or let it expire. I'm not sure what that question is referring to. Abe is saying, in put verticals such as IP example today, what does one do? Hold it until maturity or do partial selling? So Abe, this is something that we cover in our credit spread webinar. So I highly recommend you to take a look at that recording. We never hold a credit spread to expiration. So 45 days out, we sell. We usually close it out about 21 days to expiration if we have not already triggered either a take profit or stop loss signal before the 21 days. So we always exit before expiration. Stephen is saying, could you please differentiate how you view liquidity between your liquidity spreadsheet and using open interest for liquidity again? So Stephen, we never use open interest for liquidity. Open interest is not a good gauge for liquidity because when something just got listed today, like for example, the weekly options that were just listed today for December 24th, they're all gonna have a zero open interest. So how do you gauge liquidity? You can't. You gauge liquidity through the bid-ask spread. That's how we gauge liquidity. If you want to use open interest, use the open interest of the whole chain. So if you want to look at all the strikes across all the expirations, if there are tens of thousands of contracts that are open interest, then you know that thing's probably liquid. If you see across the whole expiration and all the strike prices that the total open interest across the entire chain is maybe 50 contracts or 100 contracts, then you know that that stock is not very liquid. But looking at the open interest of a specific option tells you nothing. We use the bid-ask spread to tell us the liquidity of an option. Hey, Tony, I'm interested in learning more about indices and trading them. Do you recommend a way to learn them and become a proficient trader in them? Great question. We recently just hosted an event with NASDAQ. And we have all of the recordings for you to listen to. So let's see. So this is the link to that event, which we posted multiple events on option basics, minimizing risk, technical analysis, hedging strategies using indices. So I just posted a link into the chat window if you want to learn more about trading index options. What are your thoughts? What are your thoughts on the daily QQQ position? So from my perspective, the QQQ position that we had in our daily play was a hedge for the election. We obviously did not need it, but I still think that there's a possibility that we might need it over the next couple of days. So I'm holding on to this. It hasn't triggered our stop loss levels yet. If markets break out above of this range, then I would get out of this hedge. But right now, a hedge is there to protect ourselves in the case of a downside move. The rest of our positions are long because we agree with the broader market view that markets are supportive of this, that we're still in a bull market, but we're concerned about short-term volatility. That's why we have that hedge, and that's why we're holding on to that hedge for now. How do you access the option grid? I'm not sure what you mean. If you're talking about the option chains, we don't have the option chains. We do that on purpose. You have the full options chain here. If you want to look at all the strike prices, you have the strike, the price, and the delta next to it. So that helps you select your strike prices. And you can select all of the expiration dates from here. This is how you look at the options chain using OptionsPlay. If you were short the election with vertical spreads into this recent 4-day rally, would you keep holding those put vertical spreads? Options ending towards December and January. We are holding it. We have a short put here, a long put here on QQQ. I'm holding on to this for another couple of days. I want to see if there's any type of volatility, if there's any type of event in the markets that might cause some volatility. This is meant as a hedge. This is not meant as a, how do I make money from the markets? This is saying, what if something happens that we didn't anticipate? Can we protect ourselves? That's why we have this hedge. For a losing position on SPY, should I sell out of the money cover calls and hold on SPY until it breaks out, or sell it now and buy it back once the expected pullback materializes? Mohammed, that depends on where you own SPY. Um, Chances are I mean, I'm not sure how you have a large losing position on SPY, considering we're pretty much near the all-time highs. So I, I'm not sure how you could possibly have a losing position on SPY because you're basically at the all-time highs. Even if you bought at the very top, you're only a few bucks away from that. So, I think selling cover calls is probably a better way to trade that. What to do when you sell a cover call and the stock price keeps rising? I rolled to a higher call and the stock went higher still. How many times should you roll your call? Dwight, it depends on your long-term view on the stock, right? At the end of the day, your biggest exposure is in the stock. So first ask yourself, do I want to keep owning the stock? If you want to keep owning the stock, maybe stop rolling your calls. Just hold on to the stock, because if the stock clearly is doing very well and you think it's going to keep doing well, stop selling cover calls. You sell cover calls in stocks that you think, maybe a little bit more neutral, or sell substantially higher cover calls. Sounds like you might be selling cover calls that are a little too close to the current price. And a lot of times that happens because you're trying to roll a cover call and you don't want to trade a debit and you want to continue rolling out a credit. So you keep rolling them into very aggressive cover calls. So, at the end of the day, you can't, that's a risk that you take with a cover call, right? You effectively obligated yourself to sell a stock at a specific price. Maybe there's new information comes out and the stock is now at a higher price. Now you say to yourself, I want to sell my stock at a higher price. So you roll to a higher price and the stock keeps going. Well, that's a good thing, right? Because you own the stock, you want that stock to keep moving higher. So the question to ask yourself is, do you want to keep committing yourself to selling that stock at a specific price if you think the stock is going to keep moving higher? Why do you have an exit rule for exiting credit spreads at 21 days? At 21 days, when capturing theta is the highest at 7 to 21 days? Great question. This is where I think most beginners who learn that theta accelerates at the most near expiration, lack the understanding that theta is not the only Greek that's here at play. You have delta that's at play, theta is at play, but gamma is also at play, and gamma is only at play in those last few weeks. So yes, theta accelerates to the accelerates in the last couple of weeks, but so does gamma. And when you're short a credit spread, gamma works against you. So the cutoff, if you will, where the gamma risk starts to outweigh the acceleration in theta, happens at around 21 days. That's why we exit at 21 days, because the acceleration you get in the last couple of weeks does not offset the risk that you're taking, the extra risk that you're now taking due to gamma. So it comes down to understanding the various factors that are affecting your option strategy beyond just theta. You have other factors that affect your position. Tony, we have GLD as a daily play now. Which 21 days is yeah. So I believe we're actually closing GLD tomorrow because we actually have a long GLD position. But for those of you that maybe if you're not long GLD, if you want to continue capturing GLD, I think now is a good potential entry point for GLD. But we're already long GLD and we're actually taking profits on GLD due to this move. If I had a big gain on a vertical, how would I get protection on it? Dale, I don't know what you mean by getting protection on a profitable vertical. From my perspective, you have a big gain on a vertical, close out the trade, keep your profits. I'm not sure what you mean by get protection on it. The best protection is taking profits. Did the Fed meeting outcome today have any impact in the markets? No, I don't think so. I think the event was pretty much a non-event from my perspective. Any ideas on when the smaller stimulus might occur? That's a great question. I do think that Mitch McConnell came out today. I think that the rhetoric was that we might see a stimulus package a little sooner, and I think that's part of why markets rallied a little today. But I don't know. I genuinely do not know. Shay is asking, wouldn't you suggest that we always obtain options that expire toward the middle of the month and not a week or two later, even if we are under 45 days to ensure liquidity? Example, looking at December 17th versus 24th expiration. Wouldn't you suggest that we always obtain options that expire towards the middle of the month and not a week? So Shay, I don't necessarily agree. The reason that the December 24th looks like there's not less liquidity is because it was just listed today. It's got no open interest, zero volume because it was just listed today. But it doesn't mean that it's any less liquid, because for a market maker, it doesn't matter whether he's making a market in the 17th or the 24th option. It's the same stock that he's making a market in. So whether he's making a market in a 45-day option or a 37-day option makes no difference to him. That's why, this is why I keep telling investors, stop looking at open interest and volume as your gauge for liquidity. There's plenty of liquidity. If we're talking about 1 week versus the next, it's not like 1 week is going to make the difference in terms of liquidity. Some people have mentioned a melt up by the end of 2020 where S&P reaches 4,500 and gold 2,500. Do you see that possible by the end of 2020? No, I don't think that's possible. 4,500 on SPY. I mean, first of all, that's not a melt up. That's a spectacular rally. And gold 2,500. No, I unfortunately don't see that. Just copy the Thursday event and set it to Tuesday time. That's exactly what we're doing for Tom Sosnoff. There were a lot of talks about moving from growth to value. When do you think this will happen? I think it's already happening. Look at IWM. IWM is the only index that broke out from recent highs. So it's already happening. It's been happening for, I would say, a couple of months now. The question is whether it's going to last. But if the question is, when do I think it's going to happen? It's already in play. How much would you rely on seasonal trading in the Christmas rally? I always say take seasonality with a big grain of salt, because number one, the sample sizes are small. Number two, do you think the market's going to rally just because it rallied the same time last year? The answer is no. So seasonality is something that you keep in the back of your head, but it's not the reason to buy or sell something. Can you exit a call at any time, or does it have to be on the specific times? Great question. You can exit any single options trade, no matter what trade you have, no matter what position you have. You can always exit a trade before expiration. If you sold an option, you can always buy it back. If you bought an option, you can always sell it. Just like a stock, right? That's like saying, if you hold the stock, can you get out of it at any time? The answer is yes. You can get out of your stock position at any time. Doesn't matter whether you're long the stock or short the stock. Same thing with options. Samir, with the continued election uncertainty ahead, how much protection do you recommend buying? So, that's a question. That's a question for you, as far as how much protection do you want for your portfolio? I would say most people are buying somewhere between a quarter to a half of, buying protection for a quarter to half of their portfolio. But how concerned are you about, election volatility? I think that, my concerns for election volatility are fairly small, because I don't see any real reason why the markets are going to sell off substantially. But I do think that, we have all long positions in our portfolio. It's prudent to have one hedge or one short position to hedge for some downside election volatility. I took a position on options a month ago on a stock with the upcoming earnings next week. How do you play options prior to earnings period? So Michelle, first of all, I mean, if you took an options a month ago for upcoming earnings, I think you entered the trade too early. If you're playing earnings, enter it a few days before the earnings event. That way you're only capturing that earnings event, and you're not paying for time value during that time. How do you play options prior to earnings period? That depends on what your views are for the earnings. If you think it's going to make a big move, buy a call, buy a put. If you think it's going to be fairly neutral, like I did for Wayfair, sell a credit spread. If you think that you're going to have a big move in volatility, trade a calendar spread. It really depends on what your view of the earnings announcement is going to be. And it really comes down to whether or not you think that stock's going to make a big move or not. What site do you use for retail data? William, I use a collection of institutional research. There's a great website called The Daily Shot. The Daily Shot does research. I think it's like, and it's not expensive. It's like $200-300 for the full year, and they send you economic data every single morning. So that's one of the places that I used for economic research. Dean is saying, Tony, can we assume in the daily market update, you will be sharing any thoughts you have on how the post-election period is playing out if it differs from the point of view you shared today? Dean, I think I most certainly will be sharing, very heavily Tuesday and Friday morning, my views. The daily market update is another way that we do it, but Tuesday and Friday is definitely going to be where you're going to likely see the biggest, or where you're going to see most of my views, especially if there are any changes to the election. Apple bullish. I like Apple from a fundamental perspective. They have the event next week on the new MacBooks. That, from my perspective, is actually bigger than the iPhone because the iPhone 5G is not transformational. The MacBooks moving to the ARM chips is transformational. I think it has the potential of really making a huge dent in PC sales if this is a successful product. You have I would say a very large majority of Americans that use iPhones as their primary phone and iPads as their tablet. If you have now a unified ecosystem between phone, tablet, and laptop, that is a compelling reason for someone to get off of their PC onto a Mac, especially if they're fairly agnostic and their work doesn't require them to have a PC. I've been an Apple user for a long time. And my biggest gripe is the fact that, Macs and the iPhone and iPad are basically separate ecosystems. Once they all move into one, I think a lot of people will move towards, an Apple computer. So that's why I am quite bullish here on Apple. What do you think about Palantir? I don't know a whole lot, to be honest, about that stock, so I don't have a lot to add, to be perfectly honest. If the yield curve flattens out, will that negatively impact KRE? Yes, that will. You definitely yield curve flattening will negatively affect KRE. I don't know that's going to make a big move because the interest rate curve is pretty flat right now. So I don't know how much flatter it can get where it's going to make a big difference, to be perfectly honest. For all of you that wish me a belated birthday, thank you so much. Any thoughts on Snow? I don't have a lot to add on Snow. I mean, the stock hasn't moved a whole lot since the IPO. So unfortunately, I don't have a lot to add. Thank you so much, Ted. Your view on Domino's, I think we already talked about that. I'm trying to do a cover call on NOC, and the spread is very large when I enter the trade. In addition, there's not much volume in the contract that your website suggests. What does that mean? So I don't know which cover call you're trying to do on NOC. I mean, NOC is not it's not a very liquid stock, but it's a big name stock. It's a big cap stock in the S&P 500. I'm surprised that you're not able to get filled on that. So, if you look at these Januaries, here the mid price at $9.20, I think you should be able to get filled at about $9, maybe $8.90, $8.80, at the most. You shouldn't, unless you're trying to get filled at the midpoint, then I think you are probably going to have some trouble. But moving 10, 15 cents off of it, I don't think you should have a lot of trouble getting filled on NOC. EEM has low IV and you're bullish, would buy January calls. I certainly think buying calls, especially when you have that breakout to the upside, especially if volatility is low, is a suitable strategy. How does the portfolio work? Are these trades actually, so these are the trades that we send out during daily play. So that's all they are. They're just the daily play trades in the portfolio. Could the contested election impact the markets a lot? So historically, contested elections have moved the markets about 5% lower. Not a huge amount, but certainly enough, enough to warrant buying a little bit of protection and understanding that there could be some downside. Is Nikola a sham? I'm not here to comment as to whether it's a sham or not. I like GM way more than I like Nikola. And if you want to bet on Nikola, bet on GM. I think that's a low risk way of betting on Nikola. What do you think about First Solar? I haven't looked at this particular stock recently, but I think, price action looks very similar to most of the other clean energy and solar stocks. You know, from my perspective, I don't like betting on a specific name in the solar space. I like playing more of the ETF just because I haven't done enough research on the specific solar companies. Most of the solar companies are pretty small. There's not a lot of research behind it. So, I prefer the ETF over individual names. How do you choose stocks to play earnings? I use our earnings calendar. So you see how we have an earnings link here at the bottom of the OptionsPlay tool? When you click on that earnings link, it brings up an earnings calendar. This is the first place I look when I'm trying to do research on earnings. I only trade earnings on stuff that are green, meaning stuff that are very liquid. Then I use a combination of technical, fundamental analysis, look at the stock, look at the sector, look at other names that I've reported in that sector. How have they performed? How has the market reacted to those news? Does the market react positively to it? Does it react negatively to it? There's a lot of things that go into each earnings play analysis. I will say this is one of the areas where options really shine because it allows you to take a directional view going into earnings with limited risk. For those of you that follow me on options action, probably half of my trades on options action are earnings plays. They don't all work out, but the ones that don't work out have limited risk. The ones that do work out, sometimes you see 200-300% returns on them. Look at Zoom, look at Domino's, look at Wayfair, look at Snapchat. These are the types of plays that I love playing. And I always start my research using our earnings calendar here on OptionsPlay. So thank you so much. We have gone over an hour and a half here. I really appreciate everyone taking the time out here this afternoon. I really tried to spend as much as possible answering all your questions, but unfortunately I couldn't get to all of them. There are so many of them, but thank you so much everyone for submitting your questions. Thank you so much for the happy birthday wishes. We have this recorded, and I will be back tomorrow morning on Friday, tomorrow morning at 9 a.m. to talk more through the current election, where the current markets sit, and more importantly, some more opportunities going forward. So with that, thank you so much. Have a great evening, and I'll see you guys tomorrow morning.